The US Federal Reserve lowers rates for the first time since the 2008 economic collapse. Ethereum turns 4 years old, and only 15% of Bitcoin is left unmined. This week on the Kinetic Crypto Show, we're digging in deep. The big news that rocked all financial markets this week was the Federal Reserve cutting interest rates for the first time since the 2008 economic collapse, which means it's time for monetary policy oversimplified. The Federal Reserve of the US and many other countries around the world create a thing called a target rate. The target rate is basically what banks charge one another on overnight loans on their reserves. This is important because that rate affects the rate you get on basically every loan, from your student loan to your mortgage to your car payment. But not the loan that you gave your friend Tom to play more video poker. That one's on you. So why does this rate change? Well, it's a tool that the Federal Reserve uses to achieve price stability and economic growth. Here's how it works. The lower that rates are, the easier it is for you to borrow money. Mortgages, credit card rates, student loans, lines of credit for businesses, all monthly payments on these get cheaper with lower rates. And because of this, a lot of people tend to spend more during rate cuts, whether it's on going out, scaling a business, or just spending a little more on anything because you don't have to pay so much for your mortgage every single month. Something really interesting to check out actually is the historical chart of interest rates in the US, because over the last 25 years, there have been two major cycles of interest rate raises and then deep cuts. The first big cycle you'll see is the internet bubble of the early 2000s, where old extinct internet companies like Pets.com had their speculative bubbles burst and millions of people lost their jobs in the US and abroad. The second big cycle was the lead up and collapse of the US housing market in 2008, where major banks like Lehman Brothers and Bear Stearns crashed and record foreclosures swept the country. And so Fed rate policy at work was basically enacting a series of rate cuts, which would effectively help millions of Americans lower or refinance the mortgages on their houses, taking off a lot of pressure that the economic collapse caused. But it's the year 2019, the economy is absolutely booming, the stock market's at all-time highs, and Ripple is for some reason still a top 3 cryptocurrency. Why would you cut the rates when everything's looking so good? Well, there's one word for it.
Let's say China. 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 China.
Let me ask you about China.
China. I go to China. 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 China.
The trade war with China was mentioned by Federal Reserve Chairman Jerome Powell as one of the top reasons for this rate cut. Many industries and businesses in the US with Chinese suppliers are getting hurt badly with steadily increasing tariffs, and cutting interest rates is one of the ways to curb the effects of that. And if it wasn't obvious enough, Donald Trump has not been a fan of the Federal Reserve so far in his first term.
Far stronger and more resilient than it was before the crisis. Our banks have much higher capital and liquidity, they're more aware of the risks that they run, and they're better at managing those risks. While post-crisis improvements in regulation.
So the question is, lower rates. Are they good for Bitcoin?
You're a crypto believer.
Yes.
Do rate cuts figure into anything regarding Bitcoin?
Yeah.
How?
Well, Bitcoin's becoming increasingly a macro hedge for investors, against sort of things that could go wrong. Rate cuts are adding liquidity. Liquidity is pushing money into all these risk assets and also hedges, which is helping Bitcoin.
Personally, I think the rate cut was a move from the Fed to spur inflation. Making money cheaper and more accessible means more money in people's pockets, which leads to economic stimulus and inflation. Now, whether or not people are going to spend their extra money on Bitcoin, that's anyone's guess. Ethereum officially turns 4 years old. And for those wondering what exactly Ethereum is, I made an explainer on it a few months back around Bitcoin's 10th birthday that dives into why this little brother, second in line to the crypto throne, is so special. Ethereum's rise to prominence is a total roller coaster. From being initially founded as an ICO in summer of 2014 as an idea from Vitalik Buterin, Ethereum later went on to become the crypto community's version of Kickstarter in 2017, and is set to completely remodel itself into a proof of stake system by 2020. If you're curious about Ethereum, I've compiled a bunch of links down below that go over what exactly it is, where it's going, and some of the coolest projects being developed on the platform today. And in complete contrast to the interest rate news, Bitcoin is back in one of the biggest global newspapers because the supply is running out. The UK's biggest online newspaper, The Sun, reported on the quickly decreasing amount of new coin available to discover in the total Bitcoin supply. As of August 1st, 17 million out of the maximum 21 million Bitcoins have been mined. So this story is important in my opinion for a couple of reasons. If you follow the trajectory of Bitcoin supply, which cuts its issuance by about 50% every 4 years, you'll realize that this headline is not a revelation of anything new. But it's a reminder that in the age of rate cuts, geopolitical uncertainty, and crashing third world hyperinflationary currencies, that there is an alternative. The thing with creating a new form of money, though, is that it's not just a matter of innovation to create a successful outcome. Currency and money is about trust, and you cannot code or market yourself into a position of trustworthiness. Trust is about the hardest thing to create because it simply cannot be done in a vacuum. That's why Facebook's Libra is getting absolutely grilled by politicians and leaders all over the world. Hell, it may not even see the light of day. And as we approach the final 15% of Bitcoin to be mined, let's think about trust. Whether you're fully sold as the Bitcoin narrative as a digital gold, a new form of money for the world, or just a good way to send money to a family member overseas like a remittance, every year that it runs flawlessly, every year that it runs autonomously without a hitch is another notch in the trust belt. A lot of people want to see Bitcoin at $100,000 or $1 million a coin. But if you really care about the future of Bitcoin, the technology that runs it, you have to measure it in trust. And unlike price, it's not easy to measure trust. There's global hash rates, transaction volume, all these metrics of activity, but very few of them will tell you what about Bitcoin is becoming more trustworthy than just the time it simply persists to exist. And so today I want to ask everyone a question. When did you simply trust Bitcoin? Are you even there today? And what do you think it's going to take for people to really be comfortable earning and spending Bitcoin as they do with regular old cash? And on that final note, if you have 20 minutes, I highly recommend watching ANDREAS Antonopoulos' new video on universal access to basic finance. It's a great talk on what it really means to be unbanked and how Bitcoin can solve the financial challenges of billions of people across the world. Thanks so much for tuning in this week. I'm going to be coming at you again next week, kind of the same time, maybe a couple days late, with a little short film I made on Bitcoin off of one of these little ideas I thought of late at night. Less on the newsy side, more entertaining. Hopefully it'll be really fun instead of a regular scheduled show. For those who don't know, when I'm not yapping to camera or giving you a Bitcoin baptism, I'm usually writing, directing, or editing films and commercials. The financial freedom I've gained from getting involved with Bitcoin is actually one of the reasons that I was able to start a video agency, creating commercials and animated shorts for all sorts of small businesses. And it's also one of the reasons I'm able to create vlogs like this one. And because YouTube has not given me monetization on this channel yet, because I haven't got my 4,000 watch hours or 1,000 subscribers, today I'm gonna be my own sponsor. And so here are some of the clips, some of the work that I've done at my video agency, Kinetic.
1/3 of your life is spent in bed, but something doesn't feel right. Blue light, outside noise, or just plain insomnia. We know, because we've been there too. And that's why we created the perfect weighted blanket for the perfect sleep. So perfect, even your pet rabbit will be jealous. Our weighted blanket provides the feeling of a gentle swaddle with medium pressure. It's like a hug that never has to end. At HomeSmart, we use the highest quality thread count on the weighted blanket market, which means Grandma's knitted blanket doesn't stand a chance. And unlike our competitors, our blankets are designed with extra length in mind, so that your toes won't catch cold. But don't just take our word for it. Ask our over 1,000 customers and counting what they think of it. Get the sleep you really deserve. Pick up a HomeSmart weighted blanket today.
Thank you guys again so much for watching my latest video on all things crypto news. Again, we're coming at you with another little fun video next week. Don't forget to like, comment, and subscribe on this video if you want to see more content like this. You can also donate BAT tokens on the link above if you have the Brave web browser. I'm going to be in North Carolina about 2 weeks after this point, and so we're also going to do a back-to-back kind of special episode, hopefully with the chart guys and Charting Man Dan, so look forward to that. Thanks again so much. Have a great one, and I'll see you next week.